Good afternoon, and thank you to yet another online video training by lowvarates.com. My name is Eric, and today I want to cover a topic that I hear all the time, and that is, well, I don't want to get into a VA hybrid loan because it's this type of loan exactly that caused the housing crash. I know it, my neighbors know it, I'm told, Eric, you know it, you're just a salesman. You're trying to get me to take one of these loans. And I'll tell you, nothing brings me more frustration than seeing people stuck in their ways with major misconceptions and absolutely no real knowledge of what really caused the housing crisis. So whether or not you're interested in a VA hybrid loan today, or if you're even eligible for a VA hybrid loan, enjoy this presentation. I think it will make a lot of sense to you. So let's move on. What did cause the housing crash? Well, we're going to talk about facts today. We're not going to talk about the media spin or what the news told you. We're not going to talk about other people's opinions or even really your opinion or my opinion, but we're going to stick to just the facts. First of all, loose borrowing or lending standards were the main driving force behind the housing crash. Throw on top of that cheap money or low interest rates, and all you've done is fueled the fire. Greed, first by Wall Street and then by you and I, those of us who gobbled up the greed, and then a certain type of loan, or a handful of loans for that matter, subprime loans, option arm loans, and I'll even talk to you soon about how even conventional and FHA loans played into this disaster. Now, you see ARM here. That should not be confused or tied to the hybrid ARM loan by the VA. They're very, very different, and we'll talk about that. Let's look back 25 plus years and look at the state of mind of a normal person that was going to buy a home. When our parents were buying homes, here's what they knew. If you don't believe me, go ask them. They knew they needed 20% down. They had to save at least 20% down to buy a home. So if somebody wanted to buy a $100,000 home, they knew they weren't even going to start looking until they had $20,000 in the bank. Okay? They also knew that buying a home or owning a home was not an entitlement. It was a privilege, and it was earned through hard work and years of savings. My parents, they knew that they were going to buy a small house, and then over time, if they were fortunate enough, they could buy up or move up into a larger home. How many people still think that way today? We're going to talk about that. People also knew back then that you tried to borrow as little as money possible, so get a small mortgage, and then once you were in that mortgage, try to pay it off as quickly as you could. There was really one type of loan. Everybody got the same loan. Everybody had the same rules. It was very cut and dry and straightforward. Now let's talk about the current state of mind, or at least our states of mind 3, 4, 5 years ago. Some of us have started to shift, and that's good. But this is what our kids think, and probably what most of us think. There's no reason to have a dime in the bank because no money down loans are a dime a dozen. Anybody can get them. If you live in America, then you have the right to own a home. You're entitled to it. It's people in other countries like Mexico, Canada, and Europe. They've got to struggle to buy homes, but not here in the good old United States of America. We have the right. Everybody wants to keep up with the Joneses. So people that are buying homes for the first time were buying million-dollar homes, humongous homes with pools and all of the upgrades. And if you didn't have a granite countertop, well then, you were slumming it. Who cares how much the loan's for? As long as the payment's low. Heck, I've heard people say that time and time again. It doesn't matter how much the house costs. My payment's only $800. And right now, basically, we think there's a loan for everyone. Doesn't matter if our credit stinks. Doesn't matter if we have a job or not. Somebody's going to lend us money. And for a while there, prior to the crash, that was absolutely true. Now let's talk about borrowing standards. They got way too loose or easy. Okay? Your credit score did not matter. As a prior loan officer, I had banks coming to me saying, you can lend this person $1 million all the way down to a 520 FICO score. And as a matter of fact, if you're not familiar with FICO scores, if you're down in the 500s, you have no right owning a home at all. And you know what? We actually don't care if the borrower or the person buying the house is employed. Well, let's put it this way. We do want them to be employed, but we're not going to verify it. We're not going to do any verification of employment. We're not going to call the employer. As long as the borrower says they're employed, then we're okay with that. This was perhaps the ugliest of all loan standards, and the fact of the matter is it probably caused the biggest portion of the mess, the no-doc loan. There was no need to document anything, employment, income, anything. You could basically invent who you were. You could invent how much money you earned. It didn't matter. Now, were the banks coming right out and saying that they wanted you to invent it? Of course not. But they were turning an eye, closing an eye. They did not care, and most of them have admitted in court after the fact that they knew people were lying on their loan applications, and they were just allowing that to happen. The bank didn't even care what your home was worth. There were lots of loans out there where you could borrow up to 125% of your home's value. So if your home was worth $100,000, the bank, knowing it was only worth $100,000, was willing to give you a check for $125,000. That makes absolutely no sense, but that's what they were doing. And down payments were a thing of the past. Nobody, absolutely nobody, had to bring any of their own money to the table. Now, loose lending standards, we understand that. But how did that affect housing? Well, let's explain this. As more and more people bought homes, prices kept going higher and higher. As prices went higher and higher, people tried to borrow more and more. So they got bigger mortgages to kind of try to keep up with how quickly housing prices were going up. And then the prices did what? They didn't just stop or hit a ceiling like they should have. People just started borrowing more and more and more, and prices would go higher and higher and higher. What this caused was kind of a fake inflation or a fake increase in housing prices that were just ready to fall. And when they fell, as we know, they fell very, very fast and very, very hard. Most importantly, people that had absolutely no ability or even intention to, afford the house were buying it. They didn't care. This is a true story. There were, bag boys at the local grocery store who were being told, hey, you can come in and borrow $750,000 and then turn around and sell the house later for $850,000, and you can walk out of here with $100,000 profit. That was happening, and it was happening because of the environment in which the lending institutions were playing. Now, how did cheap money or low interest rates hurt the housing market? Shouldn't that be a good thing? Well, yes, in the right environment. But on top of those loose housing standards that we just talked about, or the underwriting guidelines, you throw on top of there low interest rates, and what you've basically done is just doused an already burning fire with gasoline. So all it did was fueled the problem. As rates went lower, it allowed people to buy even bigger homes or pay higher prices for a home than what it was worth, and they were able to do this because the low interest rates kept their payment down. And if you remember, how did we think, or how do we think? Who cares what I'm paying for this as long as I can afford the payment? Now, when the housing market started to fall, and we saw signs of this, our government did a huge mistake. It started slashing interest rates to try to artificially prop up the economy. And I'm not going to get into my personal opinion today on whether or not this slowed the housing crisis or not, but I can tell you at the beginning, when we knew housing prices were starting to fall, purposely cutting those interest rates hurt us. And it caused people to continue to be able to buy homes when they shouldn't have been. Now, greed. Greed played a huge factor. If you've watched the movie Wall Street, greed is good, right? Well, no, greed is not good. Most of the greed, yes, came from Wall Street. Wall Street knew they were selling or offering loans that had absolutely no chance of surviving, but they were making so much money nobody cared. Wall Street was just like, Bernie Madoff, who it produced. These loans were a deck of cards or Ponzi just waiting to fall. Wall Street knew at some point they were going to have to pay the piper. But again, they were making so much money, they did not care. And you and I, fellow Americans, we were gobbling it up left and right. We knew we were buying more than we should, but we just didn't care. We were having way too much fun. And a lot of people, you may know them, you may have done it yourself, lied on their loan applications, and they didn't really care because they thought they were going to be able to sell their house and make money on it. And that's when all these TV shows started popping up. I believe even new networks and TV channels about homes and buying homes and selling homes and flipping them all started popping up everywhere. It became a way of life. Now, what really caused the crash? The short answer and the true answer, every single loan out there except for VA loans. Now listen, yes, I work in a VA mortgage company, but listen to what I'm saying and I'm going to prove to you why this is true. FHA loans required no down payment because you could get a down payment assistance left and right. Everywhere you looked, you could get a down payment assistance. As a matter of fact, the seller selling you the inflated house could help you by giving you your down payment. Your FICO score didn't matter, and FHA even started increasing their maximum loan limits to keep up with the artificial growth and this wave of greed that was taking over the country. Now, conventional loans, as you know by now, Fannie and Freddie, they're nothing to brag about. Even conventional loans started allowing these no income, no proof of job, no doc, and horrible credit or FICO score loans. They jumped right into the mix. Now the worst of the worst, the atomic bomb was for sure the subprime loans. Subprime loans allowed anyone that could walk and chew gum to essentially buy a house. Your FICO score didn't matter. You could be in a bankruptcy. It didn't matter. If you weren't employed, nobody was going to ask and nobody cared. And as a matter of fact, there were plenty of people who did not have to prove citizenship and they could still come in here and buy a house. Crazy. Now, excuse me, the option arm loan was also a major culprit. Not quite as loose on the underwriting standards or the approval standards as the subprime loan, but what the option arm loan allowed is it allowed you to make a payment. These were called deferred interest or negative amortized loans. What that meant is when you made your mortgage payment every month, you weren't even covering your minimum interest to the bank. So the bank took the interest that you were not paying them and added it onto your balance. So if you borrowed a $100,000 loan on an option arm and just made the payment that the bank told you had to make, 5 years later you may owe $115,000 on your house. How crazy is that you could be making a payment every month, but your debt load or your mortgage balance would still go up? Nobody cared. The bank didn't care and the person owning the home didn't care because everybody assumed the house would be worth more in the future. The interest rate on the option arm loan was tied to very volatile indexes that most people don't even know the name of or can explain, and the margin was very, very high. Now, I'm not going to go into margins and indexes right now. There are other training and other material out there where you can research this. Now, let's talk about the VA hybrid loan. It did not cause or have anything to do with the housing crisis. Do some research. Go to YouTube and search educational VA hybrid. Watch the very first video that comes up. Go to Google and search VA hybrid loan. Look for the post. It's usually number 1 or 2 that says, how about the VA hybrid arm? And it's a post. Read it. Very educational. The VA hybrid loan has never ever allowed someone to not have their credit score looked at. It's never allowed someone to not have to verify and prove that they're employed and have money, and in most cases, verifying their assets. You could never buy more than you could afford. The VA hybrid is also tied to the stable U.S. Treasury Index. Very, very stable, and the margin is very low, under 2% in most cases. It always pays your interest and also pays a huge part of your balance. It pays your loan down faster than even a 30-year fixed rate would. So now you know that the VA hybrid loan did not cause the housing crisis. If you don't know this, please go press play again and watch this over. Misconceptions, yes, are hard to break. You know that because you still aren't sure. But you need to break those misconceptions, and you need to know what really caused the housing crisis. It was not the hybrid loan. Please call us toll free for more information at 866-569-8272. Thank you.